Hello, I'm John Cunningham. Welcome to the RedChip Money Report. For those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines a global multimedia platform with traditional investor relations, reaching a global audience of investors. Today on the show, you'll see interviews with executives of two public companies. First, DGLY, stock symbol DGLY on the Nasdaq. DGLY specializes in designing and manufacturing video recording equipment and video analytics software for industries. They work with predominantly law enforcement and are expanding into commercial fleet operations and consumer use. Then up second is Giggles N Hugs, stock symbol GIGL on the OTCQB. Giggles N Hugs is a restaurant that brings together high-end organic food with active, cutting-edge play and entertainment for children. It's very popular with celebrities and their children in Los Angeles, and the company is preparing to expand into multiple new markets. We'll also talk with Bill Hench. He's a leading small-cap fund manager with the Royce Funds. Now, the quote of the week, and it comes from Byron Roth, CEO of Roth Capital. The quote, "Investing can be really hard just before it gets easy, but it also can be really easy just before it gets hard. Don't get too full of yourself when things are good, and don't get too down on yourself when things are bad." This quote comes from Chapter 7 of Small Stocks, Big Money, a book by Dave Gentry, CEO of RedChip Companies. To learn more about Byron Roth and other leaders in the small cap space, order your copy today from Amazon or right at redchip.com. Now let's get to our first interview today. It's with Stan Ross. He's the CEO of DGLY. Let's go to that interview. Stan, welcome to the show.
Thanks for having me.
Stan, your innovative technology is used by customers around the globe. Let's start off the interview with a brief overview of your products and maybe mention some of the traction that you've generated over the years.
Glad to. You know, DGLY is probably one of the leaders in the in-car video and body camera business. Matter of fact, we were the very first ones to come out with a completely solid state system that's totally encapsulated in the rearview mirror. So we have over 6,000 active law enforcement agencies. We've expanded our business to where not only are we doing, let's say, for law enforcement, but we're also doing a lot of in-car and even body cameras for commercial companies as well.
Stan, what's the essential value proposition? Why should investors own your stock today?
You know, DGLY has been very innovative in its technologies, and we stand to reap quite a few rewards from these innovations. And where I'm going with this is that we've been very successful in some of our patents, and these patents are now features that are being requested throughout the industry. One in particular would be what we call our ViewLink product, which is an auto activation device. So if an officer would turn on his lights to be pulling someone over, not only does it activate the in-car system, but it activates the body camera. And so we have the patent on that. And matter of fact, it's been very successful to the point that I would say well in excess of 90% of agencies that are now requesting body cameras and in-car systems are looking for auto activation. So that's just one of many patents that we have and pretty excited about.
Stan, why has auto activation become the standard for law enforcement agencies?
Well, I tell you, you know, it's one thing for a department not to have a body camera. It's another thing for a police officer to have a body camera, but did not turn it on. So auto activation is very crucial. Two reasons. One, you want to make sure that all your equipment is properly working. And two, you also want to make sure that your officer is paying attention to the incident that he's dealing with and not having to look for a button to push to activate his equipment.
Now, several large players in the space have allegedly infringed upon your intellectual property. You're pursuing litigation against these companies, and last year you saw several victories on this front. Can you tell us more about these lawsuits?
We've had a tough battle. I mean, we've had some very, very large corporations that have sat there and elected just to walk all over our patents and hoping that they would be able to figure out a way to have our product either be invalidated or hopefully being able to design around it. And as of to date, they have been unsuccessful. Matter of fact, the successes that you're talking about, several of the companies that we do have litigation with have tried to, in front of the patent office, to have our patents invalidated, and were unsuccessful. Not only did they try once, but they tried on multiple occasions. And again, we were very successful to the point now that no longer will these challenges be taken place in the patent office, we now have the ability to get in front of a judge and jury and take them to the courtroom and actually look for damages. And then take that a step further. This also will send a very, very strong message to the industry that the rightful owners of auto activation, the design that we have is that of Digital Allies. So we think that the industry will be coming around. We think the damages that we could be seeing from those that did violate are very large, and there's a lot of value in that.
Thank you. A leading body camera manufacturer recently signed a deal for your ViewLink product, really a commitment to purchase at least 10,000 units in 2018. Maybe just refresh, you talked a little bit about it, maybe just tell us again, what is ViewLink and what does this say about your underlying patents?
Yeah, so, this company is actually a competitor of ours. They do body cameras. They actually have the contract for the body cameras in New York and other large municipalities. They only do right now body cameras to where we actually do in-car video as well. So there's other opportunities over and above the ViewLink. And again, the ViewLink, what we did is they approached us. I politely asked them, why are you not just walking all over our patent like everyone else is trying? And they quickly said, well, we've done our homework. And so we'd rather not go down that path. So we've been selling the ViewLink, which is an auto activation for their body cameras. We've made it so that it'll utilize their equipment. And we also have it a situation to where if they would need in-car systems, we could partner up with them on that as well. They're a very nice company, a good competitor, nice little product. And so we think it's a nice relationship.
How big is the overall market opportunity?
Wow. The latest numbers that I've seen, just in the body camera side of things, you're probably 200, 300 million a year. When you look at the hardware and the storage costs associated with it. And then you throw in-car systems, which typically an in-car system will run, I'm going to say 6 times as much as a body camera. So again, you could easily throw in a few more $100 million as far as the market. And that's just law enforcement. What we're most excited about is the recent development in our commercial division. So you've got taxi cab drivers, you've got ambulance drivers. There's a tremendous amount of opportunities on the commercial division.
Now, Stan, in summary, why should investors take an interest in Digital Ally today?
Well, I think we've got a real strong portfolio of products that are patent protected, and we have a very good path as far as growth in the commercial division to where if you liked what we've done in law enforcement, I think you're going to be very pleased with what you see in our commercial division. We already are one of the providers of the largest providers in ambulance services. We've gotten a very big foothold in taxi cabs. I mean, even Royal Caribbean Cruise Lines uses our body cameras. So we think that the commercial side of our business could get to a run rate equal to law enforcement by the end of this year.
It's good to hear from you today, Stan. We look forward to hearing more from you as well as the company in the future.
Absolutely. Thank you very much for your time today.
Now, to get more information about Digital Ally, visit RedChip.com. While you're there, subscribe to our free weekly newsletter. You'll get updates about emerging growth companies, research reports, fact sheets, breaking news, and more. It's all free. Sign up today. Now, our second interview today is with Joey Parsi of Giggles N Hugs. He's the founder and the CEO. Let's go to the interview. Joey, welcome back to the show.
Thanks, John. Thanks for having me on. Appreciate it.
Joey, for our viewers that are unfamiliar with Giggles N Hugs, let's start out with a quick overview of the business concept.
Sure. We're a family restaurant and play space. Now, what that means is that we're one of the first and only establishments where inside the restaurant we have a giant play area, which allows the parents who have small children to be able to sit, eat, relax, and eat delicious, gourmet, high-end, organic food while the kids are being entertained and playing around inside the play area.
Joey, what's the essential value proposition? Why should investors take an interest in your stock today?
Over the past 7-8 years that we've been in existence, we've laid the foundation, a very solid foundation for success going forward. We have one of the best management teams, I believe, in the country, in the restaurant business, with the former CEO of Wolfgang Puck Enterprises here. the former Chief Operating Officer of California Pizza Kitchen, the former Chief Operating Officer of some of the most iconic brands in the country, including Hard Rock and Planet Hollywood, et cetera, are on my team. And we have an incredible opportunity in terms of partnerships with the largest landlords in the country, the 4 largest landlords, mall owners in the country. So we have plenty of locations to pick and choose from. We deliver an incredible amount of foot traffic to these malls, and with the malls sort of dying right now because of online shopping, people are spending a lot more time shopping online than they are actually physically going into the malls. The malls look at us as a partner. And so they're paying us to go into their malls to bring our foot traffic with us. With all that said, with our stock price being as low as it is and having record sales, record revenues, I think it makes a compelling story for an investor who's looking to get involved with an opportunity to potentially make significant gains going forward.
Joey, you're really the polar opposite of a Chuck E. Cheese. Can you tell us, how do you differentiate yourself from that franchise?
Yeah, sure. So, Chuck E. Cheese was started by Nolan Bushnell some 40, 45 years ago. Nolan is the founder of Atari, for those viewers that might not be familiar. Atari, in essence, pioneered the video game industry. And when Nolan Bushnell sold off Atari, he, for several years, he sort of sat on the sidelines and enjoyed the fruits of his work at Atari. But then the video game industry that he had created had become huge in the United States and around the world. And so he wanted to monetize the video game craze, and he created Chuck E. Cheese and filled it up with a bunch of these video games that he had and served up some pizza and called it Chuck E. Cheese. Now, how we're different, I appreciate you telling your viewers that we're polar opposite, and you're true, and that's correct. How we're different is that where Chuck E. Cheese serves pizza and what you would call a salad, we serve, chicken breast paninis and Alaskan wild salmon with ginger sauce and beet salad with candied walnuts and goat cheese. Everything is made fresh in-house. All of our dressings are made fresh in-house. All of our sauces are made fresh in-house. We use all organic produce. We use, locally sourced non-hormone meats, et cetera. So, where they are an arcade center, in essence, we're an entertainment company. We keep the kids entertained and engaged with activities and games as opposed to putting them in front of a screen. Where Chuck E. Cheese is what you would call a restaurant, and again, I would look at it more as a pizza place than a restaurant. We're a full-service restaurant. So that's how we're different, and that's how, in essence, we're opposites.
Joey, you touched on this a little bit, but your concept has proven its ability to increase foot traffic at malls. Can you talk to us more about the relationships you've built with the mall owners, and what does it mean for your expansion?
Sure. So over the past 6-7 years, as you and your viewers probably know, consumers have shifted their habits in that there is a lot more shopping now being done online, whether it's on Amazon or Overstock or elsewhere. Many more of us are doing our shopping online. As a result, less and less people are physically going to the malls and physically shopping. And the mall owners are feeling that. They are scrambling. In fact, they're very scared right now because with Kmart and JCPenney and Sears and many of the other retailers out there suffering right now, the landlords are trying to reinvent themselves, re-energize themselves, and trying to figure out ways where they can bring in foot traffic. Well, each Giggles N Hugs location brings in maybe 15,000, 20,000 individuals per month, per location through our doors. And so the mall owners look at us as their partner as opposed to a tenant. They've rolled out the red carpet for us. They paid us substantial amounts of tenant allowances to get us into the existing malls that we're in, the existing locations. But now they're offering us even more incentives and more opportunities and discounts on rent to get to lure us into their malls because they want our foot traffic. And because of that, they're all sort of looking at us, as I said, as a partner.
Joey, management is always key to success for small caps. Can you tell us more about some of the key members of your executive team?
Sure. We have Philip Gay, who's the former chief financial officer of California Pizza Kitchen. After CPK, Philip moved on and became the CEO of Wolfgang Puck Enterprises, which I'm sure your viewers are very familiar with. He was a CEO of Grill Concepts, a publicly traded restaurant company here in the West Coast. My president is John Kaufman. John came from CPK. In fact, John was the original chief operating officer of California Pizza Kitchen. Together, John and Philip grew California Pizza from just a couple of locations to over 100 locations, whereby Philip arranged for the sale of the company to Pepsi-Cola companies. So we have them on our team. We have Sean Richards, who's helped roll out concepts like Pink Taco, Hard Rock Cafe, Viper Room, etc. Together with Sean, John, and Philip, I believe we have one of the best, if not the best, management teams in the restaurant business.
Joey, you've got some impressive clients that everyone probably can recognize and would know. Why don't you give us a little more in-depth to who are some of your clients that the audience might know?
Well, obviously, we cater to families across the town here. Regular people are the majority of our customers, but because we're in sunny Southern California, and particularly here in Hollywood, we obviously get a lot of celebrities. And many of these celebrities have become friends of ours, and some of them have actually become investors in the company and ambassadors for the company, so that they can amplify our voice and what we're trying to communicate to the country for us. As an example, you guys can go onto our website and get a glimpse of some of our celebrity friends, but people like Mark Wahlberg or Adam Sandler or Jay-Z and Beyonce or Sarah Michelle Gellar or Halle Berry, etc. These are some of our clients. But recently, over the past 6, 8, 10 months, we brought on our team some favorite moms, customers of ours, Tia Mowry and Jillian Michaels, who are both ambassadors to the company. In the case of Jillian Michaels, she's our global brand ambassador. She's a significant shareholder, and we're thrilled to have her on our team. A couple of months ago, through her help and with the addition of Michelle Steinberg and Domain, which is our PR company that we just recently engaged, we were able to have NBC Extra cover an event that we did, the launching of our Fitness Fridays, whereby every Friday we have activities and games that's all about working out and being active that Jillian Michaels put in place for us. We also have a couple of the dishes from Jillian's recent cookbook that we've added to our menu. So we have a ton of celebrities that frequent our establishment, but we also have regular families that love what we do, that look at us heaven on earth, as heaven on earth. There's not a whole lot of places out there, John, where parents can come and be able to sit and eat in peace when you have a 2-year-old or a 3-year-old running around. It's very, very challenging. And so, particularly for celebrities, if you can imagine, if Beyonce is out with her child, Blue Ivy, and Blue Ivy, spills something or breaks something or, has a tantrum for some reason, that becomes front page news across the country. Well, at Giggles N Hugs, it's all about throwing tantrums and spilling things and breaking things. So in some cases, celebrities love us even more.
To wrap it up, Joey, why should investors take an interest in Giggles N Hugs today?
Well, we've done a lot of hard work over the past 7, 8 years to sort of situate ourselves and lay the foundation for significant success going forward. With our management team amongst the best in the country, with the unique partnerships that we have with all the mall owners in the country, with the unique concept that we have, with sales, our sales and our profits being significantly higher this year versus last year. In fact, if you look at our third quarter numbers, our net margins were close to 30% out of our Glendale location. That's unbelievable. To have 30% net margins on a unit level, on a restaurant level, that's extraordinary. Most restaurants right now are seeing margins in 4%, 5%, 6%. I think at one time I thought Chipotle was up in the low 20s, and Wall Street thought that they were the best. And so to show the kind of results that we're showing with margins at 30%, EBITDA on a unit level at 30% is pretty extraordinary. And then our sales was up 12% this year versus last year, when most restaurant companies are showing comps of -1% or 2%. or if they're doing really well, they're showing 1 or 2% on the upside. And so to show 12% year-over-year sales increases is pretty magnificent. We were up 7.5% in our Topanga location. So combined, I think we've done extraordinarily well. And yet our stock price is trading at historical lows. And I want to make sure that your viewers understand we have raised over $9 million to date to get to the point that we have. Close to $3 million of which came personally from me. And yet the market cap of the company today stands at around $3.5 million. Now, this is before the management team that we had. This is before all the incredible things that we've achieved over the past 6-7 years. And so to see the market cap of the company trading at historical lows when the actual reality of the business is that we're thriving, sales up, profits up, everything is doing great, and yet our stock price is down. So if an investor is looking for potential growth, I think our stock price represents significant opportunities for investors going forward in terms of upside potential.
Joey, thanks for being with us today. We look forward to hearing more from you and Giggles and Hugs in the future.
Thank you very much. Appreciate you having me on, John.
Now, to get more information about Giggles and Hugs, visit RedChip.com. While you're there, subscribe to our free weekly newsletter. You'll get updates about emerging growth companies, research reports, fact sheets, breaking news, and more. It's all free. Sign up today. Now, the final interview today is with Bill Hench. He's from the Royce Funds. Let's go to that interview. Bill, welcome back to the show.
Thanks very much. It's great to be here.
Bill, markets are at or near all-time highs, including the small cap Russell 2000 index. What do you see ahead in 2018 for the Russell 2000 and small caps in general?
Sure. If we continue to see very good economic data, and that translates into continued good earnings, there is reason to think that the small cap market should continue to be very positive. We're at all-time highs, and we should be, right? The numbers have been very good. You're talking about coordinated global expansion. But at the end, the U.S. economy, the things that have held it together, the things that drive it, auto sales, home sales, low interest rates, are still unchanged. You throw in the fact that we've had terrific advances in technology, and it's not surprising at all that when you look back and say we had, probably 8 years of underperformance in this economy, that we can't get a little bit longer term on the upside. And I think that's very much a real possibility.
Now, what sectors or industries do you find most exciting right now?
I think the manufacturing sector is probably one that we have the most hopes for. Most of their end markets, aerospace, automotive, industrial manufacturing, were doing well last year. This year, if you continue to see a recovery in the energy part of the economy, specifically domestic oil and gas production, I think that would be the last part that you needed to get very, very good earnings on the industrial side. And those stocks have gone through a lot. They did a tremendous amount of cost cutting, and I think they're really primed to take advantage of a situation where all their end markets are working well at once. I think that could be the sector you want to pay attention to. Technology had a terrific year. It had a terrific year the year before that as well. It should continue to do well, but a lot of the more cyclical names in tech might not be able to sort of keep up with the returns they've had in the last couple of years.
Now, Bill, can you talk to us a bit about your investment philosophy? Why focus on smaller cap companies? And what are some of the things you look for when you're evaluating your investments?
So it is a small cap fund, and we've gradually increased what we say is small cap. We can buy things up to about $3 billion. However, the meat of what we do is somewhere between $300 to $800 million. We like that part of the market because it's a part of the economy that in good times and bad times can give you opportunities to make money, right? You're not going to have a linear fashion in making that money, but you're going to have lots of chances to get in, to do work on your own, right? It's a poorly covered part of the market. And so if you're looking to get an advantage, you could use your experience and your sort of long-term knowledge, right, to take advantage of that. So the small cap market, I think, offers, number one, good growth, lots of turnaround possibilities, and really an under-researched part of the market. We like the value part. We've been doing this a long time. We love to buy assets that are really, really cheap, not necessarily on earnings, because, you know, when you're buying value, you're buying that they're cheap for a reason, right? They're not mistakenly cheap. They're usually cheap because something's wrong, and we like to find them when they have something wrong that could be fixed in the not too distant future. And over time, that's proved to be a pretty good way of making some money in this part of the market.
Bill, what's one of your holdings that you like right now? Something that might provide a good example of some of the characteristics that you look for.
You know, one of the things we do is we have these 4 categories that we invest in, and one of those categories are broken IPOs. And back in October, there was a company called Futera that was bought public at about $18. The drain pipe, water pipe, big heavy cast products. Didn't have a great first quarter, and the stock went from 18 all the way down to $4. It's an experienced management team. It's a nice management team. There's a big private equity shop behind them that owns most of the stock. But nonetheless, we thought a good part of the market and a good part of the infrastructure play that everybody talks about. So we were able to buy that at, you know, less than a quarter of what it came public at. The stock's recovered nicely. It's about $10, almost $11, but still $7 below where it came public. So at 18, if it seemed like a good idea and they had the fundamentals and the wherewithal to come public at that price, it doesn't seem too big a stretch to think that they could get back to that if they continue to execute on what they had originally talked about.
Bill, thanks for being on the show today. I look forward to hearing more from you and the Royce Funds in the future.
Great. Thanks again for having me. Appreciate it.
To get more information about Bill Hench, Royce, and their small cap funds, visit their website at roycefunds.com. Now let's recap the companies that we met with today. First, we met with DGLY, stock symbol DGLY on the Nasdaq. DGLY's patented ViewLink auto activation technology is the first product on the market to fully integrate in-car and body cameras. They've deployed 93,500 units worldwide, and the company generated revenue of $2.9 million in the third quarter of 2017, with $1 million in gross profits. With a string of recent victories in their patent litigation with AXON and others, there's a potential for a big upside in 2018. Then, Giggles N Hugs, stock symbol GIGL on the OTCQB. Giggles N Hugs' impressive management team, advisory board, and celebrity brand ambassadors have positioned the company for a long-term success. With proper funding, rapid expansion could take Giggles N Hugs into multiple new markets in 2018 and beyond. And of course, we also spoke with Bill Hench from Royce Funds. To learn more about their small cap funds, visit roycefunds.com. And for more information about the 2 public companies featured on today's show, visit RedChip.com. While you're there, subscribe to our weekly newsletter and you'll get updates about emerging growth companies, research reports, fact sheets, breaking news, and more. It's all free. Sign up today. And remember, before investing, do your research forwards and backwards. These stocks are for your speculative money. Gains can be significant, but you must also be prepared for the downside. You can read our full disclosures at RedChip.com. Thanks for being with me. I'll see you same time next week.